For the stock of the day, I thought we'd have a look at Uniti Group. Shares soared this morning after we had media reports that it is allegedly in takeover talks with an unnamed party. Now, the offer is said to be worth $4 to $5 per share. It did hit and enter a trading halt this morning after the news was released. But of course, this comes after we already had the company come out, I think it was a couple of months ago, and say that it could potentially be the subject of M&A and MIRA, so the Macquarie Infrastructure and Real Assets. And previously it was Vocus that we thought might be doing a deal with MIRA to make an advance on Uniti Group, but apparently this time it could be Aware Super. Of course, this is all media speculation. The business itself, Uniti Group, is in the infrastructure space, telecommunications infrastructure, internet infrastructure, and it's done very well, thank you very much. Just in the latest reporting season, shares were not treated that well in the wake of its report, but it did see, I think it was its order book growing, and really it was on costs that it did see a little bit of difficulty in that most recent report, but it is on track to meet its consensus forecast for FY22 of $145 billion, and that's despite some delays related to, guess what, Mark? COVID. Yeah. All right. Andrew, I might start with you just because you're up there on screen. What do you think of Uniti Group? Obviously in a trading halt right now, can't take any action, but it certainly seems as if this is a company set to be acquired.
Yeah, look, it's a great business, Nadine, and it's a shame that we can't buy it at the moment. Who knows, maybe in an hour or so when the trading halt lifts, or whether it's tomorrow, whenever it is. But look, it's the type of business that the market really likes because it's predictable. It's around 90% of their revenues will be annuity style. So the construction risk, which is inherent with the business at the moment as they're rolling out that infrastructure, will go away, and it'll actually become more of an annuity style business. So therefore it's of no great surprise that we're seeing the superannuation companies looking for it. I mean, they've been quite opportunistic at the moment. Think Sydney Airports as an example. So I really do like Uniti. I rate their management, and as you know, I don't usually say buy to too many direct shares, being the ETF guy, but Uniti is a buy.
Yeah, it's a buy. So what though to do? If you're already a holder of this company, I mean, you've got potentially a bid coming through. Would the strategic information, I mean, if it was you, would you just hold on?
Well, of course, we don't do advice here, Nadine, but if I was an interested onlooker, I would be just literally saying and just watching, because taking no action, and I'm sure that's what the board would be recommending as well. But normally when there's a quality asset in play, it certainly does pique the interest of others. And as you spoke about before, Macquarie had been sort of potentially involved there. Now, whether they're going to be involved in the track's another story. But certainly when you have a strategic asset in play, a quality asset in play in the right space, the best advice is to do nothing. Just simply watch, wait, and see what happens.
Yeah, and because there could potentially be an improved offer coming along, the first office is rarely the last offer. So if it comes back online, you're happy saying a buy. Let's throw this over to Mark Moreland from Teaminvest, Uniti Group. I know you're not overly familiar with the company, but it's been really doing well, making money hand over fist. It's not just a traditional telco. It really does provide that infrastructure into greenfields.
We like the picks and shovel people, which is what they are in the internet. So, and the business model has obviously got merit long term. We like recurring annuity type income as well. That's a big plus. The catch is that it's currently market cap at the moment. It's about 2.1 billion, and their sales are 158 million. And their earnings are 43 million. That's the last reported one. So it's on a PE of over 40. So it's already on a very high price. So there's no way I would consider it a buy. It's only got 4 years history, which for us is like the absolute minimum. And it doesn't make our minimum return on equity. It's currently running at 5.3% return on equity, which is pretty ordinary. So obviously there's quite a lot of value being placed by investors in their potential going forward, which is fine. It's just not what we would do.
Okay.
So I would, if you owned it already, there's nothing you can do now. It's in a trading hold anyway. But if it's being taken over and you get a good premium, that'd be terrific.
Mm-hmm. Good. All right. So that's the stock of the day. Uniti. We're watching those shares previous to the trading halt today just be soar. I think up about 17%.